Welcome everyone, John here again, and while we are in South Florida, many of you may think that that's not the Seminoles, but it is a Seminole, but it's also for a friend out there. One of our members used to live in Jupiter and is familiar with Seminole Country Club. Anyway, Chris, that's for you, brother. Anyway, here's the story, gang. What you see on your screen, and let's get into a couple things. I just made a comment and the headline, I don't want it to be a misleading situation. Number one, we do have a potential for an island bottom. Now, the market gapped lower and then gapped higher, and it left this area, which was again on a daily chart and shows up on the 60-minute. It leaves it where there's a dead air space between the prior day's low and the current day's low against the highs. So that gap in there, if I change this over here to a daily chart, you will note that we have that gap in the market. So here's a funny thing about island bottoms. They're very bullish, abandoned babies in candlestick folklore, or and quite frankly, they generally, I just never seen very many of them, and generally they fail. But here's the kicker. If we get after multiple, and the reason I'm looking at this, and this is a quick trading lesson for you guys because I think it's very important. If we try to test once, twice, 3 times today, during the day, this would be now, we went up, we gapped higher, day 1. Day 2, we tried to come back and fill that or form an equal and opposite. Gang, if we close closer to the daily high today in the spider, if the volume upticks, there's a bunch of ifs here, if. But what we're looking at is if this market has tried to press down into these lows and can't fill that gap and closes near the high, the most important hour of the day is not an hour anymore, it's the last 2 minutes, and actually it's the last 45 seconds of the day with the way we've seen money flows come into the market. But here's my take. If after several times and major attempts during an intraday basis that we've tried to fill that gap or fail from here, if we close with strong advanced decline readings on the SPY, and my supposition is we're going to see follow-through strength tomorrow. We're sitting on a powder keg. Will it happen? That's a good question. So what you see on your screen, there's a couple things. The other day I did a YouTube video for you about Amazon and the seasonal weakness that we see that occurs in the NASDAQ 100 in the month of December. Now it can go up and down, and next week we have, again, a couple things that are very important. An FOMC meeting, rollover, the quadruple witching that it's affectionately known, which occurs on the 20th, monthly option expiration. So in the next week to 10 days, there's just a ton of things to hit and barrage this market. Amazon typically does not do well in the month of December. And quite frankly, this is a daily chart. Let's go to a 1-hour chart. And what my posts are, let's see here, and maximize sell. And you can see we still have our person indicators up here. And that's the thing. With person indicators using PMC, how does this measure against the S&Ps? It's relatively weak. And until it gets relatively strong, even on an intraday basis, fund managers are not going to add to this trade. In fact, we have some fund managers who are betting for a downside action. With my work, we have a lot of strong pivot support. That's in here. These are the person's pivots. We have weekly, you have daily, and all of this strength in here. If the market closes less than that level, that line in the sand, it opens the door for further declines. The volume trend using on-balance volume is weakening. So this is a very precipitous situation that it kind of is giving us an idea that the last thing I want to be in on this dip is NASDAQ because of the weight of the Amazon effect, so to speak. Amazon can go down, but that doesn't mean all stocks go down. All right, here's the key. Amazon, if we get a daily and weekly, most importantly, what is today? Thursday. What's tomorrow? Friday, end of the week. You pay attention to the end of the week. And I have this comment that we've posted in our trading community right here. A weekly close less than 1722. 1722. A weekly close less than 1722. It targets a 1600 print. Why? It would close the lowest close. It's not a guarantee, but it definitely heightens the probability that we're going to see more follow-through weakness, and we would have come out of a weekly trading range. Many people would only look at a daily chart. Now let's change this to a weekly chart and see what the heck am I talking about. Look at this. The high of this one bar, and that's a last conditional change as written in this book right there. Last conditional change, page 264. I wrote all about that 15 years ago. It acts as resistance, and as you can see, we've not really taken out that bar's high, and we definitely have not closed below that bar's, not just closed, but that low. If you close below 1722, that's a swing low there. That's the bar's close from way back in September. If Amazon, anyone that's been buying in here thinking that they're going to make some money on holiday sales, they're dead wrong. And it would probably cause some kind of a liquidation mode end of year, an end of year potential liquidation mode. So that's why I think this is a very dangerous situation, and the green line is the next level of support that I'm looking at on the chart. So relative strength has been weakening. The PMC indicator identified a bearish divergence pattern here. As you can see, bearish divergence. Let me get up to the right drawing tool here and drawing tools and go up here. The high of this is lower. When the market was breaking out, making a new high and closing high relative to over here, we weren't making stronger relative strength readings. That's a bearish divergence right there using the PMC. I hope you picked up on that technique, because it works for intraday stock traders as well as end-of-day stock trading. But I like to look at the higher time frame first and then nail it down to the shorter term. Smart money is probably betting that this market has got a potential downside action, and if you break a sideways channel support, the theory is you're going to go down. The next rate or measurement objective is somewhere right into that 1620 area. So watch Friday, and right now look at what candle patterns are setting up in the weekly charts. An engulfing pattern. We are engulfing the open close relationship of the prior week. So anyway, this week I did post on YouTube channel for you guys on the free video about targeting and the seasonality of Amazon and its effect on the Qs. So what's this about the island bottom? I mean, here's the deal. If the S&P, which is not just Amazon, it has energy, financials, and it's got a slew of other products. The REITs, it's got real estate investment trusts, it's got home builders. I mean, there's 10 other sectors that have more weighted effect. But let's go over to this guy that no one has any faith in. It's the Russell. And if the Russell, finally, the January effect, if we can, it also has an island bottom pattern. If today, if the Russell closes greater than or near its high, this is one that you will want to be in the long side of Russell. Whether it happens today or not, it's a good question, but we want to make sure that if we try to test and fill that gap and cannot do it, and it comes back up and closes above the open in the last final minutes, the open print, if we close greater than the open print, you want to establish new longs going into tomorrow on today's close. So I hope that was helpful information, number one. So you got out of this video, you got some really neat things so far of what I do in my 38 years. And I know there's a lot of stuff out there on YouTube, and you know, most of you guys are watching are just friends and family to begin with, because we don't do a whole lot of advertising on YouTube, and we don't pay for advertisement, and I don't go out renting Lamborghinis and saying how great a trader and make money and how easy it is. That a lot of that stuff is out there. Not to bash it, but I'm just saying. And here's something that I want to go over, and this is to another friend of ours. It's Jude out in Singapore. Hey Jude, this is for you, kid. So let's go over here, and I'm going to share with you our algo optimizer. Let me switch our trading room. So this is our live trading room. So we do a couple things here. For approximately $100 a month, $1,200 a year, you have a weekly newsletter with track and tradable performance every week, A. B, it also has access, you have access to our live trading room with these types of analysis and trade setups that we do in the room. More importantly, you can choose between and freely go between and bounce between two rooms which are open to our members. So by going up here, and it may be out of sight, but we're going to click over to our algo room. All right, so let's just switch over here to the algo room real quick, or slowly. There it is. All right, so this is our algo room. This is based off our Algo 17 program at TradeStation, where you can pre-program trades, and our members get to look and view all these trades that are actively in the positions. So like, for example, we have the British pound over here, and I got multiple monitors, so excuse me if I'm bouncing around. So British pound up here, we've got gold over there, crude oil 5 minute, the SPXL, Spider, VIX, very important performer, the S&P 15-minute model, and I mean, some of these models, you can see the performance. This is another new equity high curve today. This is trading 2 lots, but Jude wanted to know what the settings were on the 5-minute model. So today, as I already pointed out, we were going to probably break support, right, Jude? You were in the trading room today, Chris, and I said break support. We're going to go down, maybe test that 04 handle, which was near that weekly pivot support. It's exactly what happened, and we tested it. Great trade. What are the settings? Let's go to format the settings right now so that you have them in front of you. And this is the Algo 17. This is not the latest, greatest release. I didn't change it over, which is 18, but good enough for government work. The Algo 17, I'll try to wrap this up in just a few minutes. It allows us to pre-program the time frames we want to trade. In a live trading room that we're not there at 4 in the morning, it takes trades from 8:40 in the morning till 3:25 end time in the afternoon, Eastern Standard Time. It won't take any trades before that. It won't take any new trades after that, and it gets out of all trades end of day. We're using the position size model number 3. We built into this program, this product, where you could trade a monetary position value, a risk per trade, and it'll get you as many positions as the risk per trade allows, or stagnant lot size, position size, 2 lots. All right? Maximum trade loss, 600. Take max profit is set at 325 on half the position. Why do we say that? Because exit strategy, half the position. So if it has a wider profit target at 67% of that profit target, it's going to jam a stop, protective stop. And if it gets up to 325, it's getting out of half the profit. So on a 5-minute model, that's a pretty decent profit target of $325 on half the position. The scale out rate is set at 50%. We're not using the last conditional change stop out. We're using a combination between dynamic and compression. It has 1.5 time ATRs to start. Now this seems complex, but guys, ladies and gentlemen, this program is sophisticated, there's no doubt, but it's easy to learn, it's easy to comprehend. You just need to know what last conditional change is. You just need to know what compression, dynamics, and ATR stand for, and that's one of the things that we teach everyone. Now, customizable exits, stop loss ticks. It adds 2 ticks to your stop just in case. That's what it optimized out. What does that mean, optimized? If I hit this word optimized, tell me what's the better performance. Should I have the stop loss at an exact number, or should I add 12 ticks and find out and optimize this and give me a 1 jump rate increment, and you optimize that? I'm not going to do it because it would change the dynamics of the strategy that's running live in the room right now. Take profit ticks. Sometimes a market trades to your price and you try to get out and you can't. So this takes out, before it hits the profit target, it shaves off 2 ticks and allows you to get out, because if it hits the profit target, it has to trade through you to do you. This allows that to happen by shaving off 2 ticks of your profit target. Next, it does take reverse signals. It does take my famous PPS buy signals. It has a 1.25 risk reward. It's using a 24 period moving average confirmation. It has a moving average of the price of the close. It's using last conditional change. These are filtering mechanism before it enters a buy signal. So as you can see, it needs not just a PPS buy, but it has to go through rigorous filtering, not too rigorous, but it needs to be above a 24 period moving average of the close. Sell signals. It's very similar risk reward ratio. Why is it only 1.25? It's a 5-minute day trading model, friends. It's not a trend mode, it's a day trading model. All right, don't confuse building strategies on end of day and higher time frames with a 5-minute scalp, which was what this would be considered. All right, tops take longer to form than bottoms, but this wants moving average of 11 based on the close. And as you can see in this model, it does use the PPS, or the last conditional change. It's taking high close doji, risk reward is 3, momentum is turned on, 4. In order to figure out a high close doji, the bars have to be down. There has to be a downtrend, and 4 bars is considered a downtrend. Moving average, low close doji is turned on, so it takes all of these settings into account. Holding period, max trading bars, 22 periods on a 5-minute basis is this strategy. Enter trade at the market order is set at true. We can use a stop in entry or a market order. And so these are the things that we, and then again, draws the lines. All right, so there it is. There is our model. So let's explain what this all means in real life. All right, so it's going to take a market order rather than by the time a stop in entry was given. So over here, if I may be so bold, over here, this generated a sell signal and it went in at the market. If it was a stop in, it wouldn't have gotten in until the low of the bar, and it would have used that as confirmation and gotten in on a breakdown. All right, the entry is here, the initial risk is there, and the initial profit target is right there. That's the initial 600. Remember that $325? It gets out of half the position mandatory at 325 and then jams a stop at the balance. So in a market environment that we had been in where we were sub 20 ATRs, meaning if we have a 20-point range every day on average in a 10-day period, taking more than 6 points out of the market is a difficult program, right? In a 24-hour period. So therefore, this is what this program is designed for. When we expand into ATRs and get into 20, 30, 40, 50 like we did last year, we want to change the dynamics of this strategy. So what does it do? It gets out of half the position at the profit and it trails the stop, and it finally got out based on that compression right there. Yeah, it left a little money on the table, but if this thing kept going down and down and down, you'd want to be out of the trade, right? So there it is. Currently, it is now short in active position, and as you can see, the ATRs kicked in. There's the initial risk. These lines, these gray lines, are the initial stop. So again, it has kicked in a compression stop. So it will reduce your loss. What is the compression stop? The compression stop was designed by us to include last conditional change and time. So it's a time and last conditional change. It tightens up the stop. If we don't get immediate results, meaning sell-off, the compression stop. So this is the TradeStation Algo 17 program that we developed. You just saw the whole thing live on YouTube and how it works in our live trading room. Jude, thank you very much. Make a good trade and make it better. This was for you because you asked for it. Again, thank you for watching our YouTube channel. And if you like what you have to see, give me a thumbs up. If you don't, make a comment. But this is how we really trade in our Person's Planet community with using our TradeStation as well as our Thinkorswim platforms. Thank you.